Are you looking for a NASDAQ Futures scalping strategy that you can kind of use each and every single day to your advantage? Now, again, there's a million different strategies out there, and I'll be the first one to tell you, they all make money. It really comes down to how well can you personally manage your edge, right? Which is your strategy. So let's get into one of the strategies that I use on a day in and day out basis for trading options, for trading the futures. It really doesn't matter if you're trading Forex or crypto, it's all the same thing, all the same rules apply. There's a couple of things that I have set up on my chart I want to kind of show you guys. The purple line that you see is the 20 SMA. This is the main moving average that we're going to be looking at. Now, again, when we are trading the 20 SMA, we are going to call this a supply zone if it's above us or a demand zone if it's below us. The yellow line that you see on the screen is the 200 SMA. And then if you can kind of see those faint black lines, that is what's called the linear regression channel 50. Now, again, it's been asked many, many times before, how do you put the linear regression on your charts? I can really only find it on Thinkorswim. There's other platforms that do offer different variations of it, but sometimes it doesn't really match up. Again, if you can put some type of variation, that's fine. If you can't, and you want to use a Thinkorswim platform, do that. If not, it's not gonna really kill you. So let's look at what exactly is going on here with the NASDAQ today. We had a nice little dead cat bounce. There was plenty of areas of opportunity to make money. In fact, it kind of provided 2 or 3 opportunities to the long side, and it's provided 1 opportunity back down to the downside. So what we would be looking for here is this close over the 20 SMA. You can see at 6:45 Pacific Standard Time, we get this close over the 20 SMA. Now at 6:50, we confirm the high price. It's also getting over this linear regression channel, okay? So if we kind of use the linear regression as well as the 20 SMA as our supply zones, what would we be looking for if you're going into this trade with the intention of scalping, right? The theory is we want to take profits into the next area of supply and then hold a runner and kind of move that break even stop on your runner up a little bit, right? So if that's the case, this is the candlestick. This is going to be our reason why candle here, 645. Our entry candle is going to be 650. Our take profit from a price of around 14,606 on a scalp, right? Because some of you guys are scalpers. Some of you guys don't like to hold trades. Again, I fall a little bit more towards the scalping side of things. I tend to leave a lot of profits on the table, although working on it. I'm a lot better at holding runners when it comes to options because that's where I kind of come from. I come from an options dominant background, right? So again, with futures, it's a little bit different. Still kind of adjusting my position size when it comes to playing futures. So, you know, holding those runners can tend to, you know, be up a substantial amount of money and then you kind of give it all back. I still am not personally, you know, comfortable with seeing massive gains on the future side of things and then kind of giving them all back. So I'm leaning more towards the scalping side of things. Most of my trades are around 5 to 10 minutes max. But what I am working on is holding a runner, at least 1 contract, right? So again, if we're looking at getting in at 14,606, the first area that we would want to be taking profits is around 14,650. Now, again, this is a 45-point move, and depending on your position size, this would be enough to make some people turn off their computer screens and go about their day. This is a fantastic win. Even though there was a lot of money left on the table, there should be nothing to feel bad about. Again, what the market was doing last week, pulling back, it was a matter of time before we seen some type of dead cat bounce. We do have a clear line in the sand if the market does want to continue to go south. If we do lose Friday's and today's lows, there's a big opportunity there to go short again on the market. Now, again, if we did hold a runner, right, what would we use as our trailing stop? We're going to use a close below this 20 SMA. So we want to make our strategy as simple as possible. And the reason being is because managing your emotions once you're already inside the trade, should I sell here? Maybe, you know, it's going to pull back on me. Oh, I don't think the market's going higher. Those type of emotions are hard enough to deal with on their own. So when we have a bunch of different things going on our charts as far as our edge and our strategy, the last thing we want to do is make our emotions more complicated by having a million different things to do once we're inside of a trade. The main thing we need to monitor is, Are we over our short-term trend? Again, I want to say that again, because a lot of times traders are taking profits, like you, for example, are taking profits way too early, and then you're chasing the trade later, giving back the small amount of gains that you did win, when in reality, you should have caught a bigger portion of that move. So if our entry candles at 6:50 in the morning Pacific Standard Time, and we're taking a little bit of profits off here at the next area of supply, what would be, based on this chart setup, the next area to kind of take those profits, right? I want you personally to look at the chart, and I want you to see, where would you take profits? Okay, the next area to take profits over this 200 SMA would be here at the linear regression, and that is trading at a price of 14,705. So this move from here all the way to this linear regression is a 100-point move. Now again, even if you were trading one micro contract, this is a $200 winner in less than an hour and a half after the market has opened. So a fantastic trade there. If you're carrying two, it'd be closer to $300, $250, or you know, somewhere around there, depending on slippage and when you got in and out. Now, obviously, if you're trading bigger size and you have bigger drawdown and you're playing something like a mini contract, this could be a massive winner here. You know, $2,000, $1,000, $3,000, you know, massive winner here. So again, what would we necessarily be looking for on the second entry? So the second entry would have to be after the first hour, right? So if we look at these on the hourly time frame, let's look at the first hour of the market here, 6 o'clock in the morning my time. So it's going to run from 6 to 7. If you noticed a 7 a.m. candle, I necessarily probably wouldn't have taken this close to the 20 SMA. I would have taken the confirmation when we started to break through the 20 SMA. That price was sitting at around 14,664. So if we go back to the 5-minute time frame, we kind of see where that 664 area was sitting at. That 664 area was sitting right around here in this vicinity. This candle here, right? Where is it at? This candle here. So this is also another entry here. So I want you guys to think about what I have on my chart, and I want you guys to really understand, all you're doing as a trader is pushing risk to the middle of the table, and then you're trying to manage that risk through your edge. So if our edge is getting in on a confirmation over the 20 SMA, what would be our next edge? For one thing, our profit taking would be here at the 200. But if we're looking to either add to our position or hold a runner, well, when the next supply zone that we close over, right, here at 710 over this 200 period moving average, well, we have another entry here to either add to our position or hold a runner at around 7:15 Pacific Standard Time. So this goes from a price of around 663. Now, again, what was that price level on that 1 hour chart that I just gave you? Over the 20 SMA, it was around 664. So notice how on your smaller time frame, you have the 200 SMA matching up with something on the larger time frame, the hourly chart being the 20 SMA. So when you have those two kind of confluences working for you, and you have another take profit area here on this linear regression at 706, you're talking about a 40 to 50 point move that essentially, as long as we are trading above the 20 SMA, you should stay in the trade, right? So essentially, theoretically speaking, someone could have got into this trade here on this 20 play. They could have just held it the whole entire way until we closed underneath the 20 SMA here at 10:55 in the morning at a price of 14,796. You're talking about almost a 250, 300 point move. Even one micro contract, a lot of you guys complain about, well, you know, it only moves $2 a tick, and it doesn't move that much. You take $200, $300 out of the market, this is a $400, $500, $600 trade in your favor, and it's essentially stress-free. That little risk on the table to essentially take a move 200, 250, 300 points is absolutely fantastic. Now, again, I mean, you definitely can, you know, do the math on how many number of contracts you normally play. But again, you know, depending on whether you're trading for a prop firm or a personal account, I would definitely recommend to trade micros. I would start with like 2 to 3 micros at a time, and, you know, kind of let the play, you know, work in your favor. It's either the trade needs to work in your favor to take profit, or there needs to be technical damage done to where you have to exit the trade. There is nothing else in between. Everything else is just noise, right? So even in this particular situation, the first entry candle, 606 pulls all the way back to 582. So you're talking about a 25 plus point pullback immediately after confirming. And a lot of times traders, they don't have the stomach, the patience, or they're sized too big, meaning they're trading too many contracts to where they can't even withstand that 20 to 25 point drawdown. Now, again, remind you, this is not the ES, okay? This is not US 30. This is not the RTY. This is the NASDAQ, right? This is the big granddaddy of them all. So a 20 to 25, even 30 point kind of pullback is definitely something that you're going to have to sit through numerous times, right? It's not like every single trade you get into is just going to go with no drawdown. This period of drawdown here is definitely something that was worth sitting in, just due to the fact of the reason why candle, the nature of this candle being so significant. Now, again, in Evolution Traders, in my private mentorship, I teach how to get in on this reason why candle at 645. And again, we kind of point these out in the live trading room all the time here. You guys will know what I'm talking about if you're watching this video. For those of you guys who don't know what I'm talking about, you know, I have some training stuff out there for you guys inside the private mentorship. But again, so let's look at the first play, the 20 play here. This is a winner. A close over the 200 with a confirmation into next supply zone is a winner. Let's look at the close over this middle linear regression line here at around 728. Let's look at the confirmation. Let's use our 20 SMA as a trailing stop. What would we be targeting from a price of 724 all the way up to 806? Guys, we're talking about another 60 to 70 point move here. So essentially there was a move here, a move here, a move here. You could have still captured 150 plus points out of this move the whole way up, taking 3 trades, 3 entries. Now let's look at our first kind of pullback here. Our first close below the 20 SMA. We put in a new low below the 20 SMA and immediately spikes back up. This is a lot of times, and I'm going to make some training videos right now in a minute, but this is a lot of times why traders start to get themselves chopped up, because they take this short position, it goes in their favor for a brief second, immediately starts to pull back. They were way oversized, meaning they were trading way too many contracts. And as this pulls back, they stop out, okay? As this starts to pull down again, they go short. They're so impatient that it's fluttering around. The candle hasn't closed yet. It starts to spike back up. They sell, you lose more money, only to look back at the end of the day and see this is down from 788 all the way down to 780 points, 88 plus points now at this time in your favor. But you're stopping out because you're trading way too many contracts. You have no idea where technical damage is done. Technical damage would have been done on this 1105 candle if this candle closed, okay, over our reason why candle. Now you can see us definitely wick over our stop loss about 2-3 points. However, it never closes over it. And even in this particular situation, you would have to look at 2 things. The previous high never gets taken out and the high of day never gets taken out. So even though you're in a little bit of drawdown in this period of time, you have to bite your tongue and hold through this move. You have to. If you can't, you know, your stop loss, technically a true stop loss on this short play on the 20 SMA play should have been here, 14,384. So what you need to do is, if your entry is going to be down here at 788, you're looking at almost a 40 to 50 point move. Now you may be thinking, that's way too much risk. I can't put on a 40 to 50 point move. Well, maybe not with your normal position sizing, but can you put on a 40 point stop loss with 1 micro, right? 1 micro contract would be an $80 loss if this trade didn't work out. If you can't stomach an $80 loss, we're trading the wrong instrument, right? So even in this particular situation, if you would have sold, let's just say now, right? Because I'm looking at the charts at 717. If you would have sold at 717, right? 14,717, your entry price is 788. So you still took 60 points off this move. Even trading 1 micro contract, you still made about 125 bucks, $120, 115 after fees and slippage. So, you know, this is still a $100 trade, and the trade only took 2 hours, right? So it's not that long of a trade. There is periods where, yes, it gets a little boring, and yes, you can tend to get, you know, a little bit of anxiety when you feel like the trade's going against you. And when you see this trade close over the 20 SMA, you start thinking to yourself, well, looks like I'm going to get stopped out here. Again, in this particular situation, could you have used this as a stop loss and kind of broke even? Sure, right? It depends on how true to your true stop technical damage you would have wanted to stay. But even so, let's say someone stopped out at 12 o'clock for a break-even trade. Look what happens right on the next move. It immediately comes back down, confirms, and runs from a price of 774 all the way down to 797. So it's how true are you sticking to your edge? How much do you follow it? How much do you trust your own strategy? And how well are you managing your risk? Again, got a little bit off a tangent here. Just kind of wanted to show you guys how I use this NQ scalping strategy and how you can potentially use it to your benefit. Again, guys, if you want to trade with me, you want to get access to the courses, the private mentorship group, you want to get access to the live trading and watch lists that are being posted every single day, make sure to follow the link down in the description box below. You guys can definitely join. I'd love to have you guys be a part of the team. We try to work as best as possible together. You know, some people like to be a little bit more active. Some people like to kind of sit back a little bit more and go through, you know, a lot of the lessons in the courses, and they really want to understand things. That's fine. You don't have to be active. You don't have to be vocal. You can take a few trades a week and still manage to make money. It just all depends on how active as a trader that you want to be. Again, I mean, there's setups every single day. So we definitely try to, you know, help everyone out to the best of our ability so that we can all make money together. If you do want to take me up on that offer, that link is down in the description box below. If not, and you still are listening to me ramble, please do me a favor, like, comment, and subscribe. I would highly appreciate that. The YouTube algorithm would highly appreciate if you could like, comment, and subscribe. I'll see you guys all on the next video.